Good morning, everybody. This is Live Trading Talk with Patrick MontesDeOca for February the 25th, 2022. We have a lot of red in the markets today, follow through from yesterday's reversal here that essentially was counterintuitive of the Russian invasion news that hit the headlines. Let me just watch the market here for a little bit as we have, it looks like we have seen some major top reversals here in corn and grains, commodities. Gold is down $39 to $18.87. Silver is down 77 cents to $23.94. After the high that was made yesterday of $25.70. And Bitcoin is back up to 38,785, followed through from the signal that was produced yesterday, that we announced yesterday in the live trading show. The NASDAQ is into a little bit of a correction once again into the weekly numbers. The buy one level of 13,935, the buy two level of 13,393. And we might be activating a buy trigger for NASDAQ here as we trade about 13,935. So it seems that the NASDAQ is into support area between the buy one and buy two. We're expecting a close about 13,935 to activate a buy trigger, a bull signal. Let's watch the market here for a little bit again to allow for this volatility to settle down here and see where the VCPMI is directing us to. What I would like to share with you is a report that I published yesterday for our subscribers in Seeking Alpha called Mean Reversion Trading. Mean Reversion Trading Weekly Review. Russia Russia's invasion creates a bull trap. Today, February 24, 2022, Russia has invaded Ukraine. Putin appears to be taking advantage of an apparently weakened America after the withdrawal from Afghanistan and an apparently disunited European Union. The invasion is going to have a major impact on the global economy. Inflation will probably accelerate in food prices and oil. Fundamentals. Today, February 24, 2022, Russia has invaded Ukraine. It is a full-scale invasion. Sanctions have been imposed. Putin appears to be taking advantage of an apparently weakened America after the withdrawal from Afghanistan and apparently disunited European Union. The invasion is going to have a major impact on the global economy. Gold reached sharply higher today, up about $55. The high was 1976. Gold may continue to rally to the 2020 high. It appears to be breaking out of the upside. We are maintaining our long-term position in gold. Gold is a safe haven, so buyers are coming into the market in the face of a great geopolitical uncertainty. Now we are seeing aggressive profit taking after the high today. The market got overbought into this area of 1976. For the monthly, 1887 was the sell-to level for the monthly. So gold is overbought. We have a short trigger for the weekly. It was an opportunity today to take profits. For gold, was this the impact, or will it now move into a higher area of consolidation in the 1900 to 1950? We are locking in some profits in equity unless we see something more dramatic. It appears that the Russian invasion may have put in a bear trap. Short term. Look for consolidation in gold. Silver also hit a high of $25.70 and is now down almost $1, so it reacted similarly to gold to the invasion of Ukraine news. Volatility reigns supreme. Patrick MontesDeOca, Equity Management Academy CEO, said, "It is a trader's dream. The move in precious metals is not over, but if you have profits, lock them in." The grain markets were limit up early this morning on the invasion news. Crude oil was sharply higher as well, reaching $100 a barrel. It could hit $150. One of the biggest energy producers, especially for natural gas, is Russia. Grain production from Ukraine and Russia will affect the global market. Ukraine produces about 26% of the world's grains. Buyers will need to find a new source. There is still a drought in the U.S., so there will be a lot of upward pressure on price. Inflation will probably accelerate in food prices and oil. Energy markets are already changing due to the concern about climate change. Until there is a major alternative energy to oil and gas, they will still drive the energy markets. The 10-year bond is about 191, coming down, which has taken some of the pressure off the Fed to raise interest rates. The Fed must be relieved since they do not want to raise rates in the face of $30 trillion in debt. Inflation is running at 8%, so there is a negative yield on the US dollar in bonds. Such negative interest rates cannot be sustained, so we are having a flight from currencies into other assets, such as gold, silver, and Bitcoin. However, the war may lead to more harm to the economy, which will pressure the Fed to end tapering and print even more money, further decreasing the value of the US dollar. For the NASDAQ, the variable changing price momentum indicator, VCPMI, indicates a buy trigger at 13,935 has been activated. The buy 2 trigger is 13,395, which has a 90% chance of the market reverting from that level back up to the mean. This is a major buying opportunity. There is going to be a lot of talk about a bear market in stocks, which is what we're looking to get into the market. The monthly trigger is at 13,528, so we are confirming that we are looking at some kind of a bottom in stock indices. Prepare to go long. This could run up to 13,935 if you're aggressive. Buy at the market. Bitcoin showed some weakness today, coming down on the invasion news. We have made a bottom at 34,925 and activated a weekly buy trigger at 36,052. We bought Bitcoin at the market in the dip today, February 24, 2022. This is a buy-in for the mid to long term. We are seeing Bitcoin transforming and integrating into the financial community as an asset to trade or one to be held on for the long term. Investors see it as an alternative to the US dollar and other fiat currencies controlled by central bankers and their propensity for printing money and thereby devaluing currency. If we are getting a bottom in the NASDAQ, it will provide a great opportunity to accumulate more Bitcoins since they seem to move in tandem to some degree. We have beneficial long positions in shares GDX, SILJ, DUST, either through stock ownership options or other derivatives. I wanted to share this report because this is what I saw here yesterday. And we're looking to buy the market here in NASDAQ. You want to buy the NASDAQ at the market? Buy the NASDAQ at the market. We're buying the March 22 NASDAQ at the market. We're long at 13,910. We want to use a max dollar stop according to your profile. And the target automatically is 14,503, which is the mean for the day. There's no signals here in gold or silver, as the market is in a corrective pattern, and a swing corrective pattern. if you're long from 37,993 on Bitcoin as of yesterday's signal, the target is 40,633, which is the nearest daily target, and the weekly target is 41,427. You can trail your stop, or you trail your position, you might say here, as the market moves towards its target. As you can see here, it activated a buy trigger from the daily, the weekly signal, follow through from the buy one level, and it is in a bullish trend, with the targets again weekly of 41,427, daily 40,633. The sentiment in the stock market, or the sentiment in general, has been extremely bearish, with the sentiment looking for a bear market in stocks and the NASDAQ and so on. And the VCPMI is a contrarian indicator to the sentiment. This is what I'm pointing out to you, that the fundamentals are completely inversed to the signals that are produced by the variable changing price momentum indicator, standard deviation, reversion to the mean principle. So what you're going to see here is the momentum, or the sentiment that drove the prices down. Once the market begins to penetrate through some key levels here, and it begins to activate the bullish price momentum by the average price moving up, even though it may be within that bear big trend that technically is classified as a bear market, this is beginning to identify the reversal of that big bear trend by identifying the first thing is the price momentum short term within that bear trend. And that's what the blue levels identified here of buy one and buy two represent. We use the pivot points to identify those levels, but the algo identifies them in color, and the probability level basically is very, very high mathematically when the market penetrates these levels, either above the mean or below the mean, daily, weekly, or monthly. I want to make a comment here, in particular, as we expire here with the silver market. I think that what we saw yesterday was a classic example of using muscle to influence the price. And even though the price got up to these levels here that we saw as we came into this week, basically, and even the monthly levels, it appeared that we saw massive selling by central bankers, as usually, which happens at the end of the month. And you can verify that information by looking at the COMEX open interest and by looking basically at the commitment of traders report. But what I am interested in here more than anything else is the price in relation to these levels. And we reviewed the extreme levels of the price yesterday that were above the weekly numbers. It was overbought. It was above the monthly numbers. It was tremendously overbought. And it gave the opportunity for the muscle or the paper shorts to come in and sell aggressive short selling in the paper market to stop, to take out all the stops that future traders use. And as you can see here, the waterfall result basically is that it came down and it pretty much began to activate a lot of technical computerized algorithms. This is one of the things that the VCPMI identified for us yesterday, that the market was extremely overbought. It was 2570. It almost got out to the 360-day cycle trigger activating an annual level if we had gone above 2585. But this is the consequence of what the basically the algorithm identifies for us, in that the higher the price goes into this red area, the higher the probability that we're going to find supply. And this is an example of that supply that came into the market, and it drove the price down through, it activated a weekly short trigger, which we talked about and we mentioned. The market high was 2570, and after it made the high, when it came down below this trigger points, it activated this waterfall correction, and massive selling took place here. And so we saw pretty much more than $1 move, almost $2 here from the high that we made. And we're trading at a critical level now that even anticipates to be the 61.8% Fibonacci retracement from the high that we saw on the big chart here, from the low that we made back on December 15, which was the annual low that we made in gold. And as you can see here, it almost met the upper end of the channel that points to about 2617. So this pattern is not completed yet, but we do have a reversal as of yesterday, a major top reversal, and we could be coming down into the lower end of this band, which is in that 2331 to 2267. Our next cycle date is basically the 28th of this month. So I expect that if we do come down into that 28th of this month, that would be an incredible opportunity to add to our position, as things, I believe, are going to get more dramatic. I think economically, this has kind of put in a wrench into the decision-making process of the Feds, and we have yet to see what monetary policy they're going to recalibrate to based on this situation that unfolded with Russia, which is really, I think, long-term, fundamentally a major shift in the paradigm of geopolitics in that area or the Eurozone area. Once again, I think this is a good buying opportunity here for the NASDAQ, for stock indices. I think we've come to a real value. So follow your position with a trailing stop, make your target 14,503, and have a fantastic trading day. Any questions at all, please like and subscribe. Let me know. Share it with me, and I'll talk to you later on this afternoon during the market wrap. Have a great trading day.